Welcome, traders. In this video we're going to go over the ratio numbers, also known as the density ratio. The density ratio is something new and completely unique to ZoneTrader Pro, and it was an idea I've had and wanted to implement now that I have a good working cumulative delta that in and of itself is unique. As you may know, the cumulative delta, which is what all of these numbers are derived from, is based on the size of the order and not the size of the fill. That's what makes these numbers 100% unique to ZoneTrader Pro. And when I first developed the numbers, my original thought was that the higher the ratio, the stronger the move was going to be. And then I realized that the higher the number represented a distribution or accumulation of contracts on limit orders. And when I realized that again made this a completely unique feature of ZoneTrader Pro. So what I've done here is I've actually created a new chart, and this new chart has a higher zigzag and a higher tick number. And I put this on its own screen so that I can have a reference of when there was previously high numbers, and I take note of that as they come and trade into the future. And the other thing that I did is that I put the divergence signals on here also, and you can see that we had some excellent divergence signals yesterday using the tool, even though the market was extremely illiquid due to the China trade war factor. And let me go ahead and show you what I've done to set this up. For the data series, I have 1000 ticks and tick replay. For the indicators, the zigzag ZTP is set to 3 deviation points. The special divergence is set to a filter of 10 with a price deviation value of 2. So we're looking at a smaller zigzag there, and 1 for the deviation contracts. We are telling it to show the divergence and show the zigzag. We're also telling it to reconstruct the tape. The delta divergence, I've done something different here, and this is just an experiment that I'm trying right now. I have told it, because of the illiquidity that currently is in the market, that I want to see all trades. So this is just something I'm testing. When the liquidity returns eventually, I will put this back at the reconstruct tape and the 25 as a minimum filter. I am using a price deviation value of 3 and the deviation contracts of 150 and 3 for the key points. We also want to show the key points delta and keep non-divergence. And then I also put on here the ZTP rotations. And the reason I put the ZTP rotations is to see when we have an impulse move. An impulse move is generally where you have a move of about 7 to 8 points in one direction, and that's also what I call a strong trend. So the number in order to match the zigzag needs to be 13 in this one. And because this is a trading chart, I've also put delta strength on here. The number that I did that was a little bit different is I doubled the number of the filter that I normally want to see, because on this chart, because it's a bigger chart, I now only want to see larger trades. So I've made it invisible on this chart, but when I'm trading, I of course make it visible so that we can all see that. So here's a chart from Thursday, August 1st, before the news broke, and you can see something pretty interesting here. We do have a really nice accumulation trade here, which is also a typical ZoneTrader Pro trend trade. What was interesting to me while this was going on was that these numbers for the density ratios were high as the market went up, 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 and up. And I kept saying to myself, this is so unusual. I don't understand this. Why are these numbers so high? Normally, if we have a number of about 100 or more, that's signaling a distribution. And if we look down at the bottom of the chart on the ZTP rotations, we're only getting rotations of 3, 4, and 1 5-point trade. And I thought that was really unusual. And that's also the purpose of these rotations, is if you're seeing impulse moves to the upside, such as we have a 9 here, a 7, another 7, a 13, a 6 1/4, a 7 1/4, you're seeing these impulse moves. That means that you're taking an extreme risk trading short against these impulse moves up, even though they do have high ratio numbers, because nothing is telling you that a distribution had been started. But this entire morning I kept thinking to myself, why are these numbers high, and is this some kind of huge distribution that was going? So let's understand what these numbers actually mean. In this move here, we have a density ratio of 200, and what that means is from the beginning of this zigzag back here, there was an average of 200 contracts being sold on limit orders for each of these price levels. And the way we get to that is our KP2 number represents all the contracts between the beginning of the zigzag and the end of the zigzag, and that number was 10,402. This move was a 13-point move, which is 52 ticks, so that gives us an average delta of 200 ticks per price level. And as price fell from the top of this zigzag to the bottom here, they were absorbing it at a rate of a delta of 155 contracts per price level. So that's important. It's not 125 contracts. It's a delta of 155 for each tick, and in this case it was 17 ticks. Again, it was just really unusual to see these super high numbers that were occurring on the sell side, and I'm in no way suggesting that these guys knew that the president was going to put out a tweet about the tariffs against China, but it just was very, very unusual. Now here's the purpose of having this on a larger chart on a quote-unquote normal day. We see that at 10 o'clock in the morning here, we had a very high density number of a negative 231, and that in effect put in the low for the rest of the day. We see here that we then traded higher and exactly to our counter trend zone, which put in a number of 153. Again, a very good number, and that yielded a very good trade out of that number. And then that traded into a ZoneTraderPro reversal trade. Again, a very good trade. Now what you need to learn from this is that here we've put in a base right here of negative 231. That base was tested. The buyers stepped in limit orders. They didn't need to step in limit orders as hard when price came down and tested again right here. And then the high of the day was also a higher number here of 193. And when that number is put in, we can look to take a trade against that if we have a pattern on the 150 tick chart. So here's that setup. On the smaller 150 tick chart, we formed an exhaustion pattern, and that exhaustion pattern was a test of a high. We see that the number is low, and in this case I read the number as being low because there was probably a significant amount of sellers in this area right here, and then price traded higher into the exhaustion trade. When we look at the order flow, we see that historically, we have a super strong area of resistance right at where price had traded to. And that's the purpose of these extension zones. And then on the first bar, we see that we had a point of control absorption trade, and we had a very high delta strength number. When we came back, we had a point of control extension, and we had extension zones being created here, and that is super important. And we again see that we had a very high delta strength number of -901. The reason that the delta strength number is in black is that that represents the fact that the average volume was at least 175% of normal. So why is that important? Well, at this point here, which is at the exhaustion trade, that is telling you that there was a fight going on between the buyers and the sellers. And that fight was this entire period, starting at the low here and into the high here. And then what we were looking for is we were looking for the creation of these extension zones, and we had a point of control that was high on this bar. And then the next thing that I want to see is on the 1000 tick trading chart, look at how the delta strength had come in here and was nothing but green until we reached the top. Remember, these are orders of 150 or more. So there is even a stronger filter here. Exactly at the top, we get a sell. And then in the area of our exhaustion trade, we have 4 different sell orders, 2 of them that were over 400 contracts apiece. So this is exactly what we want to see if we want a reason to get short. To understand these numbers a little bit better, and to understand the pattern that we have when we have special divergence, let's take a look at a couple of the special divergence trades. So what we want to see is we really want to see a direct line with not very many bars between the high here and the low here. So what this 28 is telling us is that between here and here, the average delta was a positive 28, and this is a filtered number. Now, the reason we don't want a lot of bars up here is we don't want filtered buyers to be coming in and screwing up our number up here at the top. We'd like to see this as just a straight line down and giving us that number there. As we can see in this no demand trade right there, that's perfect in what we're looking for. That thing went straight up and it had a -3 delta for each of the 10 ticks. So that's really what we're looking for. Here's another special divergence, and remember, this is on a 150 tick chart, which is only a 7 tick zigzag. And this trade worked, but really the better trade was here with the distribution. We see that we did all of this trading and there was a lot of selling going on here before we reached our zigzag. So all of those numbers are being accounted for in here to give us this -64. Here we went straight up, giving us our distribution trade, and in my opinion it was just a much safer trade to take. Here again, this is another normal news day from about a week ago. We see on the open we put in this low right here with a density ratio of 163. Again, we came back and tested it, and if you look at this on a 150 tick chart, we'd have the same exhaustion pattern here. And then we traded into a broken reversal pattern here, and then established the high here. And again, as you can see, we entered an exhaustion pattern. And again, this number doesn't have to be high because the auction has found its high. and then we trade off and we trade down. Now, what I thought was interesting is if you were tracking where the low was from this previous low at 954, when we traded into that strong trend, this is exactly where we traded to. And again, we had a fairly strong number here, but because we were in a strong trend, we again got a strong number here, traded lower, and then put in the low for the day right here. Once again, at the low of the day, you were given on the smaller 150 tick chart an exhaustion pattern, and on this chart you were given a no supply pattern. One other comment, then I'll wrap it up. One of the things that's important, and I've had several people ask me about this, is that for any of the divergence patterns, and that includes the special divergence trades we see here and over here, we have to have a bar to close in order to get a signal. So in real time, when prices traded up to this high right here at 3009, we're not going to get the no demand signal at that point. That bar has to close down here at 307. These are not trades that you're probably going to be able to get into, but they are good to see if you were thinking about getting long here for whatever reason. Because we need the bar to close in order to give us this signal, the numbers being included in that bar as price traded down are what is creating the actual no demand. So when you see a no demand, what you want to see is you want to see it at the top and not trading down like this. This signal on the 1000 tick chart is not very handy except to determine direction. And this is why we want to trade them based on the 300 tick chart, because we have this direct line coming down here and we don't have to wait for the bar to close other than the current bar, which is generally just 1 or 2 ticks wide and not 1 or 2 points wide. So while the special divergence is good for seeing the direction on a larger trend chart, and it's not really all that great to be looking to take a trade based on that larger chart. We want to stick with either this chart or the 150 tick chart to base our decision on. Hope you've enjoyed this short video on the density ratios, and if you should have any questions about them, be sure to give me a call. Thanks. Have a good day.